It is 8:19 a.m. Pacific Standard Time. It is the 29th day of January already in the year 2026. Almost done with 1/12 of the year, guys. Already. Shit going by quick. This is episode 1246 of Bitcoin, and we got all kinds of crap going on in the markets today. Everything shit the bed all at once in the same hour candle. It was really, really weird. So Bitcoin started going down first. Okay, so like about 2 hours ago, somewhere around like in the 7 o'clock a.m. range, Pacific Standard Time, started seeing a drop in Bitcoin, and that continued into actually about 6 o'clock a.m. to 7 a.m. We started seeing a drop, continuing on into the 7 o'clock candle. But then I started looking around, and everything, even gold, was shitting the bed. And then I started looking a little bit further. Turns out the Dow shit the bed, the S&P shit the bed, NASDAQ shit the bed. And then I was like going, okay, well, something clearly happened. Maybe we struck Iran. So I go and I look at energy. I look at West Texas Intermediate and Brent North Sea and then natural gas. And all of them in the same hour candle is shitting the bed. Now, the energy is definitely up for the day. You know, it's actually been doing very, very well. But energy, commodities, Bitcoin, I mean, it's like, I don't know, something happened, and I have yet to hear a single piece of news about it. So if anybody knows what the hell happened, hit me up on nostr and tell me, did we strike Iran? Somebody on nostr, I did ask that question on nostr. Somebody did write back and say, didn't the EU just clarify that their stance on Iran is that their government are actual terrorists? Now, if that occurred this morning, I could see that shaking the markets, because at that point, if true, if the EU actually said that, then that means that the West would be aligned and strikes against Iran would be sanctioned. As far as the West is concerned, and as far as the West is concerned, we're apparently the only people that live in this world, so strikes would be sanctioned. I could see that being the cause of something, but I don't know, because I haven't actually heard anything about it. But we've got other news going on. We've got the SEC and tokenized assets. We got Robinhood and tokenized assets. Then we've got this report about the possibility that a single entity is keeping the Bitcoin price suppressed. I really don't want to believe that, but it could be true. So I'm going to give it to you, and you can make your own judgment on that. And then Coinbase, it looks like they're trying to align themselves with the Trump accounts push. We'll get into all that. A Japanese banking giant applies for a United States banking charter. So a Japanese bank wants a charter because they want to get into this whole crypto role. So no matter what the hell's going on in the markets today, Japan wants in. The Fed, they kept rates steady yesterday, as I pretty much thought that they would. And I got a little bit of news about that. Now, oil. Let's get back to oil. I've got a story here from CoinDesk that's talking about oil starting to rally and how it could cause inflation. And as we know, inflation is bad for Bitcoin, because it means what? If inflation is still running hot, because you got to pay more for goods, because shipping takes oil, you know, the tankers burn oil and the airplanes burn oil, and it adds to the price of goods, right? So if inflation is running hot, the Fed doesn't do what? Lower interest rates. Metaplanet doesn't give a shit about any of this, apparently, because, well, they're raising millions of dollars to pay down debt and buy Bitcoin. And then if I get to it, we've got a Bybit story. They are looking at becoming a neobank themselves. They're like the second largest crypto trading platform out there. But first, the SEC. The Securities and Exchange Commission says tokenized assets are securities first and technologies second. So, wow, okay. Does this mean that Ethereum is now a security? I don't know. We'll find out. Probably not. It's from Decrypt, and it is written by Vince D'Aquino. Putting a security on blockchain does not change its legal status. Oh, okay. I see where they're going. 3 SEC divisions said that on Wednesday, adding that tokenized assets face the same registration requirements as traditional instruments. In a joint staff statement on Wednesday, the agency's Division of Corporation Finance, Trading and Markets and Investment Management said tokens that represent securities remain subject to federal securities law. Quote, the format in which a security is issued or the methods by which holders are recorded does not affect application of the federal securities law, the statement reads. On-chain transactions refer to securities transfers recorded directly on a blockchain or distributed ledger rather than through conventional database systems. Issuers can offer tokenized securities as a separate class or alongside traditional shares, according to the statement. If a tokenized security is of substantially similar character and confers substantially similar rights and privileges, it may be treated as the same class for certain purposes under federal securities laws, regardless of format. The only difference, it said, is that, quote, instead of maintaining the master security holder file through conventional off-chain database records, the issuer or its agent maintains the master security holder file on one or more crypto networks. Yeah, I know they're trying to go broad with this statement, but that ends up being, I don't know, my gut feeling is that is too broad and it's going to be too, it's going to be too interpretive. All right. So I think that's going to cause them more problems and headaches than they want, but whatever. The statement comes as the federal agency shifted its stance on crypto under the Trump administration, dropping or closing more than a dozen cases over the past year, including actions against major crypto companies that turned on whether tokens, staking products, or wallet infrastructure constituted unregistered securities. Pausing to say, how the hell can a wallet infrastructure be a security? I'm not buying a share in the wallet. It's a utility. I'm using the wallet to hold my own shit. This is ridiculous. While the guidance reinforces the securities laws apply regardless of the technological format, it's the same legal framework underpinning many of the cases the agency has abandoned. But on Wednesday's statement, it sidesteps the harder question that those questions or cases have raised on whether crypto native products like tokens and staking programs are deemed securities in the first place. Ethereum illustrates the unresolved boundary that the statement leaves untouched. Oh, yes, goody. In 2024, Consensus revealed in an unredacted lawsuit that the SEC had, in March of 2023, authorized an internal investigation into Ethereum 2.0, issuing a formal order that explicitly treated Ethereum as a security. The probe, approved by the commission the following month, stood in contrast to public comments from former SEC Chair Gary Gensler, who repeatedly declined to state whether or not the agency viewed Ether as a security. The SEC later closed its Ethereum-related investigation without bringing enforcement action and declined to comment on its decision. The SEC appears to have softened its general stance on crypto, but is still actively pursuing cases. The staff statement is saying very clearly, tokenization changes nothing legally, but the unspoken reality is that tokenization changes everything operationally, and the existing securities framework is not built for on-chain market structure, Andrew Rousseau, public affairs attorney and CEO of AR Media Consulting, told Decrypt. The SEC's staff statement also does not answer, quote, whether on-chain ledgers can replace or legally equal traditional books and records. Think of this as the overarching infrastructure. If a blockchain is the de facto cap table or bond register, but the SEC still requires transfer agents, registered custodians, and broker-dealers, then the blockchain is legally just ornamental and not authoritative, he added. And that was Mr. Rossow explaining. While the SEC appears to be enforcing technology neutrality while relying on technology-specific assumptions, neutrality at the classification level masks non-neutrality at the operational level, Rossow said. The SEC staff statement, quote, freezes the baseline, defers structural reform, and shifts the burden to the entrepreneurial and innovative sectors by quietly expecting us to figure out how to, quote, comply first, then come talk to us, he said. Okay. That right there said it all. Leaving it up to the entrepreneurial and innovative class to figure out how to comply first and then come talk to the SEC about getting a stamp of approval. What does that sound like? Well, it sounds like Gary Gensler's SEC. We're not going to give you a checklist of everything that you have to do. No. You're going to comply with the rules and regulations as they are written, even though a lot of your technology cannot apply to that. And then you're going to come talk to us for regulatory approval. And what we're going to do is we're going to say no. And so it seems like the seeds of Gary Gensler's SEC is still in operational mode over at the SEC. And we'll have to wait to see whether or not this shit clears up. But here's the deal. If you buy Chevron, just because it's on a blockchain does not mean that it is not a security. And that honestly does, first of all, not only does it not surprise me, it is a well duh moment. Of course it's a security. Just because its format changes doesn't change the underlying structure of what it is, and it is a security. And so is Ether, but we won't get into it because Robinhood, their CEO says GameStop incident was a wake-up call for tokenization. Oh, I love this. Vismaya V from Decrypt. 5 years after the GameStop trading frenzy rocked Wall Street, Robinhood CEO Vlad Tenev says the episode was a wake-up call that exposed deep flaws in the U.S. market plumbing and convinced him, Vlad Tenev, that tokenization may be the clearest path to preventing another such failure. In a post on X, marking the January 2021 meme stock crisis, Tenev said Robinhood and other brokerages were forced to halt buying of volatile stocks like GameStop due to the clearinghouse deposit rules tied to let's try this again. The clearinghouse deposit rules tied to the then 2-day settlement cycle. All right, pausing to say bullshit. You turned off the buy button on Robinhood when everybody and their dog was trying to buy GameStop and AMC and the rest of the quote unquote meme stocks. You grayed out the button. And nowhere had you ever said anything about doing such a thing because of the 2-day settlement cycle. This is bullshit. Vlad is bullshitting you. They turned off the buy button because they were told to turn off the buy button, and it had nothing to do with a 2-day settlement cycle. I'm sorry, it's all bullshit. Anyway, the result, he wrote, was a massive deposit requirement, trading restriction, and millions of unhappy customers as outdated infrastructure collided with unprecedented retail trading volume. Yeah, bullshit. This is The remarks revisit one of the most controversial moments in Robinhood's history when, in late 2021, retail traders from Reddit's Wall Street Bets triggered a short squeeze in GameStop stock sending its price from $17 at the start of the year to an intraday high of $483. Robinhood soon restricted purchases of GME and other stocks, triggering lawsuits, political backlash from lawmakers, and a single high-profile House Financial Services Committee hearing where Tenev apologized for the company's handling of the crisis. Pausing, why are you apologizing if it was the rule? Yet you're saying the rules of the 2-day settlement cycle dictated your actions in turning off the buy button on Robinhood, yet in the House Financial Services Committee hearing, you said that, I'm sorry. You apologized for it. Why are you apologizing if you were just following the rules? Again, bullshit. Tenev said Robinhood's advocacy helped move U.S. stock settlement from T plus 2 to T plus 1, meaning trades now settle in one business day, but noted delays still stretch to T plus 3 or T plus 4 around the weekends. The remedy he advocates for is tokenization, which he says enables real-time settlement and freer trading as an approach that Robinhood is already rolling out in Europe with plans for 24/7 DeFi-enabled stock tokens. Quote, it's reasonable to say that clearing and settlement rules played a big role, Robin Singh, CEO of crypto tax platform Coinly, told Decrypt. Quote, while faster settlement could help reduce these stresses, tokenization doesn't remove all market or regulatory challenges, quote, end quote. But the critics say the settlement bottleneck only partially explains what went wrong. While the T plus 2 clearing cycle, remember the rules, amplified liquidity pressures during the surge, it did not affect all brokers equally, raising questions about whether Robinhood's internal risk controls and capital planning were adequate for the scale of demand it faced. Mushir Ahmed, founder and managing director of FinStep Asia, told Decrypt that traditional brokerages have previously handled similar surges in demand for stock without incident. Quote, it is likely that Robinhood had not factored in capital reserves and risk management controls for such a high scale of interest. Irrespective of the scale, in terms of collateral, the buck stops with the broker to be able to ensure smooth trading for their clients at all times. If a firm is unable to keep up, then it is a lacuna that they need to work on to fix, Ahmed said. Tokenization has been attracting growing interest, with top executives framing it as the next step in the financial evolution. Tokenization of stocks can potentially alleviate collateral pressures, Ahmed said, if there are appropriate smart contracts in place to source the collateral in real time. Still, regulatory constraints loom as on Tuesday, SEC staff reiterated that tokenized securities remain subject to existing federal securities laws, meaning that, quote, blockchain format alone does not change an asset's legal status, as we just heard in the previous story. Quote, without regulatory clarity, such efforts are moot, Tenev wrote, saying collaboration with the SEC and clarity-driven tokenization standards could avoid another 2021-style shutdown. So there you go. Tokenization is on the table, and it's going to remain on the table, and they're going to eat it like they're eating roast beef and pheasant. It's going to be sickening to watch this happen, because what have I been saying? I'm just seeing all the crypto bros basically just look at their position now as an ability to enter what they never were able to get into before, traditional financial markets. Maybe they wanted to go work for Wall Street and they got, told to fuck off, you're too dumb. So they built a blockchain, and there you go. They took a bunch of people's money, they pissed it away. They said they got a blockchain. They never really were able to prove it, but somehow or another, CNBC had that talking head on their show 4 or 5 times. Next thing you know, they're writing their own goddamn check. Anyway, I'm just saying, this whole Tenev thing, it's bullshit. They turned that button off on purpose. I'm not sure. Now, liquidity, I could see that. But because he was following the rules, no. Because if he was following the rules, he would have said that in the finance hearing when he was asked about it instead of apologizing. So the guy's lying. Vlad Tenev is a liar. Do not trust him. Do not trust this guy either. If this guy, quote unquote, exists. Let's we'll go. Single Bitcoin entity keeping BTC price suppressed below $90,000 according to an analysis, and this is from Cointelegraph. Bitcoin lingered beneath $88,000 into Thursday's Wall Street Open as attention switched to order book manipulation. So, data from TradingView showed ongoing BTC price weakness with Bitcoin acting in an increasingly narrow range. After failing to sustain above $90,000 the previous day, frustration continued to build among traders as stocks and precious metals smashed records. In his latest analysis of exchange order book liquidity, Keith Allen, co-founder of Trading Resource Material Indicators, he had a theory as to why Bitcoin could no longer beat resistance. Quote, fire charts shows Bitcoin price is being suppressed by one entity using a liquidity herding strategy to push price lower, potentially to get their own bids filled or possibly to keep price pinned in the lower end of this range before Friday's options expiry, he told ex-followers on the day. Allen referred to one of Material Indicators' proprietary trading tools covering liquidations at key nearby price levels, as well as whale order volume. As Cointelegraph reported, large volume entities are known to influence price action using liquidity to shift the market, trapping less experienced traders in the process. Quote, a significant amount of bid liquidity is concentrating in the 85,000 to 87,000 and a half range to strengthen support and potentially provide a foundation for a bounce before the monthly close, Allen continued. He warned that closing January below the 2026 open level at 87,500 would, quote, serve as the gateway to paradise. I've never heard that word before, but as much as I don't want to hear it, it's actually kind of an awesome word, paradise. Wyckoff BTC bottom countdown continues. Continuing, pseudonymous trader CW described 86,000 as a buying wall provided by whales. The gap between the buy and sell walls is narrowing. Volatility is coming, an earlier ex-post forecast. Earlier, Wyckoff analysis lead commentator Marty Party to predict that Bitcoin would put in a long-term low around the end of the month. This could see a dip below 80,000, an event that would act as the Wyckoff spring event before a dramatic market turnaround. Marty Party uploaded 2 charts showing how the event could play out in the coming days. And of course, those charts are here, but I'm not going to go through them because what I found the most interesting about this story is this analysis from this other guy, the guy that's not named Marty Party. I can't remember, Keith Allen. And his graph, which is indescribable. It's just basically just a bunch of bars. But if he's right, and there's a single entity that has enough Bitcoin and enough thumbs on the market pulse that they can basically collapse the heartbeat at any given time, well, this isn't good. However, is Bitcoin the only market that a single entity can drive doing this? I don't think so. I think there's a lot of things that one entity can control. And this is one of the reasons why I hate Wall Street in the first place. It is, first of all, it is a casino, right? Like the gold price and silver price. That is not driven by retail going to their coin dealer and buying spot bars and coins of gold. That's not what's driving this. It is also not being driven, I think, as much by governments buying physical gold as it is institutional players buying paper gold in the form of ETFs. And that's where I've always got an issue. If you're not taking physical delivery of the thing, it should not have a futures contract traded to it. In fact, I believe, and this is never going to happen, but like if you buy gold, let's say you're a gold trader and you buy gold on the markets, you got to take physical possession of the thing. They got to ship it to your house. You got to store it. And that goes for oil. That goes for silver. That goes for platinum, palladium. That goes for uranium. Like, I should not be able to buy uranium futures because I can't store it. I think 80% of the problems that we see in traditional finance is because people are basically just trading paper. If we were all forced to physically possess, store, and secure the thing that we think has value, then that value, then and only then, becomes real. If it's just an ETF that you're trading to another trader, it doesn't have any value. It never will have any value. That's the way that I think about Bitcoin. That's why I don't have Bitcoin ETFs. If I buy Bitcoin, I store it in cold storage under my keys. I physically possess the ability to vector that Bitcoin in the digital world. If I bought gold, I would not be buying gold ETFs, nor silver ETFs. I would buy the metal, but I don't want to buy a $5,000 vault and pay somebody $2,000 to actually install it properly so I can store my $500, $700 worth of gold. This is another reason why I stay in Bitcoin, even though gold is screaming. I don't want to deal with it. And I don't believe that holding paper gold is the same as holding actual gold. So there's the rant for there. Coinbase to join Trump accounts push. Eyes Bitcoin payments for children. Look, somebody's actually thinking of the children. Micah Zimmerman from Bitcoin Magazine. Coinbase announced plans to participate in President Donald Trump's newly launched Trump accounts program and is exploring delivering its matching contribution in Bitcoin rather than traditional financial assets. In a social media post today, Brian Armstrong, Coinbase CEO, indicated the company intends to support the initiative within Coinbase and its own employees. Armstrong wants to match the federal government's $1,000 of seed money for eligible children and wants to do it in Bitcoin. Quote, starting to invest early is more important than ever. Trump accounts is a great move to kickstart financial security and literacy for children. We're proud to join POTUS's initiative by matching the $1,000 from the U.S. Treasury for all eligible children of Coinbase employees. Wow. Hopefully we can pay the $1,000 in Bitcoin. Hopefully. Why hopefully? Why don't you just do it? I mean, if you're going to do it only for the children of your employees, this is an internal matter, not federal. I don't know, man. I smell a rat and it's bald. Anyway, Trump accounts are one of the provisions that came out of the One Big Beautiful Bill Act, a major legislative package championed by Trump. The initiative automatically qualifies U.S. citizen babies born between January the 1st, 2025 and December the 31st, 2028 for a $1,000 government deposit into a tax-advantaged investment account in their name. Unlike traditional savings vehicles, these accounts must be invested in low-fee, diversified U.S. stock index funds managed by private financial firms that are locked until the beneficiary turns 18. I can't do the rest of this article because that's making me laugh too hard. Why? How do I give my friends a whole shit ton of money without anybody thinking I'm giving my friends a whole shit ton of money? I know. I'll force the taxpayers to put $1,000 because it's for the children into all these kids' accounts, but they got to buy U.S. stocks. And those stocks got to be managed by my buddies who get a management fee. You see, this isn't what we think it is. Although, kudos for Orange Man coming up with that one. It's actually kind of brilliant if it wasn't so goddamn dastardly. GreatGhee. Get your ghee at greatghee.com. That's greatghee.com. Make sure you use code BitcoinAnd so that you can get your clarified butter, because that's what ghee is. Okay, so how does it work? Well, first of all, you start from grass-fed butter sourced and produced in Virginia, made exclusively from completely unvaccinated grass-fed cows that live on regenerative agriculture, single-family owned farms, and then you melt it down in a pan, and I guess in GreatGhee's case, a great big pan, because he's got a lot of butter, and you melt it all down, and you let it basically simmer slowly until all the rest of the milk solids, all of the proteins, residual sugars fall to the bottom and basically fall out of the solution that is butter. Because butter has a lot of stuff in it, mostly animal fat, water, milk solids, sugars, proteins, some other stuff. The solid part basically gets heated up and kind of what's called denatures and clumps together and then falls to the bottom, and the water boils out. Once all that's done, you basically pour off pure golden animal fat, and it's perfect for cooking. It's got like a smoke point of 185 degrees Fahrenheit, so you can cook steaks in a frying pan at some of the hottest temperatures if you want. Like 485 degrees Fahrenheit is pretty hot. I just put them in plain and then put butter on the top of them. But hey, if you're making Indian food, you need ghee. If you're making anything that you need a nice, toasty, great mouthfeel fat for, you want GreatGhee. Go get GreatGhee at GreatGhee.com. Use BitcoinAnd in the coupon code, because that will tell my friend over at GreatGhee that I'm great. No, I'm actually just kidding. It will tell GreatGhee that I made a sale for him and he can get me back on the other side here at the Circle P with Satoshis, because Circle P is where I bring plebs just like you with goods and services to plebs who want to buy said goods and services with Bitcoin. Because if you're not selling in a Bitcoin, you're not in the Circle P. Go to GreatGhee.com. That's GreatGhee.com. Use BitcoinAnd in the coupon code. Now, Japan, and if I can actually get my cursor, my computer's wigging out on me. Japanese banking giant's crypto subsidiary applies for a U.S. banking charter. So a Japanese bank wants a United States banking charter. I wonder why. Sander Lutz, Decrypt.co, the crypto-focused subsidiary of Japan's largest investment bank, has joined the growing list of digital asset firms seeking a coveted banking charter from the U.S. Treasury Department. The subsidiary, Laser Digital, is based in Switzerland and owned by the Nomura Group, the Tokyo investment banking and brokerage giant. On Tuesday evening, Laser announced it had filed an application with the U.S. Office of the Comptroller of the Currency to form a national trust bank. The bank, Laser Digital National Trust Bank, would focus on digital assets and offer custody and spot trading services. Quote, institutional digital asset markets are entering a new phase defined by scale and regulation and durability, said Steve Ashley, Laser Digital's chairman and the proposed chairman of Laser Digital National Trust Bank. Quote, the U.S. is the most important financial market globally, and we believe the next chapter of digital finance will be written by firms that are prepared to operate at that level of scrutiny and permanence, he continued. And he didn't say anything about what they would actually write in that next chapter, just that they would write it, and it has something to do with scrutiny and permanence. It's suit speak. The company joins a long line of crypto firms seeking to cash in on the Treasury Department's new, far more permissive approach to bank charter applications from crypto companies. And in recent months, stablecoin issuers including Circle, Ripple, BitGo, and Paxos have all received OCC National Trust banking charters, as did a Lord of the Rings inspired bank backed by Peter Thiel and the co-founders of, Palantir. Yeah, see, I told you weeks ago before Christmas, I had a show where I was making fun of all these names from Peter Thiel, like Palantir and a couple of other things. And I was like, oh, these are all names from Lord of the Rings. And lo and behold, there's now a Lord of the Rings inspired bank. Oh my God. Let's see. Oh, and it's allied with Donald Trump, and it's named Erebor. I might have actually brought that news. Who knows? Anyway, numerous other crypto mainstays, including Coinbase, Sony, and payments processor Stripe, all have applied for lucrative bank charters, which have become increasingly attractive after President Donald Trump signed the stablecoin-focused Genius Act into law last summer. The Trump family's own crypto platform, World Liberty Financial, applied for an OCC bank charter earlier this month. Okay. I'm sorry, it's a conflict of interest. It just is. I don't make the rules, but I can interpret them. And it's not because I hate Trump. I don't care. It is a conflict of interest. It just is. He's the sitting president of the United States, and his family is applying for an office of the comptroller of the currency for a national trust bank. It's not a violation of any particular law that I'm aware of, but it is clearly a conflict of interest. Let's move on and we'll run the numbers. CNBC futures and commodities. Well, we're still in the green on energy, even though they gave up some of their gains like what I was saying earlier in the show. Brent North Sea is up 3 points to $70.42. Oil, rather West Texas Intermediate, is up over 3 points to $65.14. Natural gas is up 1.6 to $3.78 per thousand, and gasoline is up a point to $1.91 a gallon, and Murban crude is up 2.18 to $69. So Brent North Sea beating out Murban crude, which is a little odd. Shiny metal rocks, as I mentioned, not having a good day. They have been having very good days, but today they're mostly in the red. Palladium down 1.5. Gold is down 0.8 to 5,256.8, which is still huge. Platinum is down 1.5. Silver is down 1.25. Copper is the only in the green, 3.75% to the upside. Let's see. Ag is mostly in the red today. Biggest winner, rough rice, 0.59% to the upside. Biggest loser is coffee, 1.5 to the downside. And live cattle is down 1/4. But lean hogs are up 1/2, and feeder cattle are up 1/4. Indexes, traditional financial markets not looking so hot, but it could be worse. S&P futures down 1 point, NASDAQ down 1.6%, Dow is down 1/4, and the S&P mini is in the red by 0.67%. And $85,060. For God's sakes, Bitcoin, get your act together. It's not Bitcoin's fault. It really isn't. It's the humans it's the humans. Fuck them. Cats would be better with Bitcoin than we are. $85,120 gives us a $1.7 trillion market cap. We can now only buy 16 ounces of shiny metal rocks with our one Bitcoin, of which there are only 19,981,776.16 of, and average fees per block remain the same, 0.02 BTC, taken in fees on a per block basis. There's about 40 blocks carrying 39,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte, low priority is 0.4. And hash rate, let's see what hash rate's doing. Same as yesterday, 885 exahashes per second. So I guess the miners that are affected by the weather or are on the same grids of states that are affected by the weather are still shut down, so that those states can thaw out. Now, from Chocolate Butter, yesterday's episode of BitcoinAnd, I got Jason Hyde with 250 says, speaking of silver, I bought 40 silver eagles in 2020 before I knew anything about Bitcoin. Then the price dropped and I finally sold last year and barely broke even. Wish I would have waited until this year to sell, but I had bills to pay and didn't want to sell BTC. All right, look, I understand everybody out there is kind of, I'll admit it. I'm not feeling all that great about today's price drop either. And why? Because gold and silver are screaming. And what does that do? That causes FOMO. Are you human? Well, if you're human, you probably are feeling FOMO as well. And while we sit in BTC waiting for people to figure it out again for the 18 millionth time, we've got people like Peter Schiff dancing all over Bitcoin's grave again for the 18 millionth time. And yet, as I stated earlier in the show, all of that shit is paper fucking gold and paper fucking silver. It's not real. And when a lot of these people go to try to sell their gold and silver, they get 30% below spot price. They're not selling at $113 silver. No. They're going to take a 30% haircut on that shit. And that's if they can sell. Because I've heard multiple stories at this point of people trying to sell physical metal and it's not working well for them. But you know what does work well? Selling paper gold and silver. Oh, you can do that shit instantly. But if you're smart and you don't want rehypothecation possibilities on your gold and silver, you're going to buy the physical metal and you're going to store it in a safe or something. And then when you go try to sell that physical metal, you get a problem. So that forces people into what? Paper gold, paper silver, paper whatever. Because it's all a casino. Nobody can make any money off of you, really. Well, most people can't make yearly or annual fees off your ass in management if you're managing your own gold or your own silver, or in our case, our own Bitcoin. They want the management fees. They want you to buy the ETFs. I feel sorry for a lot of people. Anyway, Short Row of Sticks from Nostr Gang says, thank you. Anya from Bitvocation with 1,000 sats says, thanks for covering Bitvocation's annual Bitcoin job market report in such detail. You're welcome, Anya. Pleasure doing business with you. Permanerd with 210 says, hi. Well, hi, dude. Here and gone. Ooh, wow. 23,046 sats says, holla for your dollar. Damn, son. 23K. Thank you, brother. Nick Dose with 139 sats says, cheers. And that's the weather report. Welcome to part 2 of the news that you can use. The Fed chair, kept rates stable. Bitcoin price steadies near $90,000. You can tell when this was written. As the Fed pauses rate cuts and Powell signals a neutral stance, Micah Zimmerman from Bitcoin Magazine starts us off on this side. Bitcoin hovered near 89,000 on Wednesday as the Federal Reserve opted to hold interest rates steady, pausing its rate cutting cycle and striking a notably calmer tone on inflation in the labor market. The Bitcoin price traded above $90,000 earlier in the session before slipping to around 89,500 as Federal Reserve Chair Jerome Powell spoke at his post-meeting press conference. The move came after the Fed announced it would keep its benchmark federal funds rate unchanged at a rate of 3.5 to 3.75%, ending a streak of 3 consecutive 25 basis point cuts delivered in September, October, and December. The decision reflected a central bank increasingly comfortable with the economy's trajectory, even as inflation remained above target, and policymakers cited moderating job growth and lingering price pressures as reason to pause further easing. The Federal Open Market Committee voted 10-2 to hold rates, with Governors Stephen Mirren and Christopher Waller dissenting in favor of another quarter-point cut. Mirren, whose term expires on Saturday, has consistently argued for deeper rate reductions. Waller, meanwhile, is one of the potential candidates to succeed Powell as Fed chair and last dissented in July when the Fed also held rates steady. In its statement, the FOMAC said the economy continues to expand at a solid pace, noting that job gains have remained low while unemployment has shown some signs of stabilization. Inflation, the committee added, remains somewhat elevated. Powell reinforced that message, emphasizing that after cutting rates by a cumulative 175 basis points over the past year, the Fed now views policy as close to neutral. Quote, "It's hard to look at the incoming data and say that policy is significantly restrictive at this time," Powell said, describing the current stance as, quote, "loosely neutral," or rather somewhat restrictive. It's just in the eye of the beholder, end quote. That framing mattered for markets. Bitcoin has historically responded positively to easing financial conditions, but Wednesday's price action suggested traders who were prepared for this FOMC decision and were recalibrating expectations for near-term rate cuts rather than reacting to outright hawkishness. Powell struck a measured tone on the labor market, pushing back against fears of a sharp deterioration. He noted that recent payroll reports showed average job losses of about 22,000 per month, while private sector hiring remained modestly positive. Slower labor supply growth, he said, reflected reduced immigration and participation rather than collapsing demand. On inflation, Powell pointed to tariffs. He's blaming tariffs as a major driver of elevated goods prices, calling them a largely one-time effect rather than a source of persistent inflation. Core personal consumption expenditures inflation stands at 2.9% year over year through December, which is still far above the Fed's 2% target. So there you go. That's what happened with the Fed yesterday. So now you know. First gold, then silver. Now oil is starting to rally, and oh my God, it's bad news for Bitcoin. Oh shit. It's Omkar Godboll from CoinDesk. For Bitcoin bulls, it feels like one setback after another. First, precious metals like gold and silver surged to record highs, sucking capital away from the crypto market, and now oil's starting to surge too, threatening to skew macroeconomic forces in favor of the Bitcoin bears. Paradise. The per barrel price for West Texas Intermediate, a type of light sweet crude from Texas fields serving as a benchmark for North American energy pricing, has risen by 12% this month. That's the highest price since September. Its European and international benchmark Brent North Sea has seen a similar rise. This is bad news for Bitcoin bulls, counting on steady inflation and lower interest rates in the U.S. and other parts of the world to reignite the rally. Bitcoin peaked above 126,000 in early October and has since dropped to under 90,000. Oil is a key ingredient to everyday goods and services, so when its price rises, it raises costs across the board. Higher oil price makes gasoline pricing, raising transport costs for everything, including food deliveries, clothes, electronics, and more. These costs are not then, or rather are then passed on to the final consumer, raising the general price level in the economy. This in turn leads to workers asking for higher wages to keep up with rising inflation, leading to a self-fulfilling cycle where salaries climb, companies then raise prices even more. Quote, "We find that oil price pass-through to inflation is both economically and statistically significant, and that it occurs both directly and through second-round effects," Federal Reserve's explainer says. Quote, "Higher energy prices can also raise consumer and business expectations for future inflation, indirectly raising food and core prices now," end quote. Central banks typically react to rising inflation by hiking borrowing costs, making credit and money pricier across the board, just as the Fed did in 2022 when it rapidly raised interest rates. Hold on. Oh, for God's sakes. Amazon has sent me, the Aria from Amazon recruitment team wants me to go work for Amazon. Yeah, that's bullshit. When you get those, it's complete bullshit. Just saying. Anyway, the latest oil price upswing comes as the Fed grapples with fresh inflation worries. On Wednesday, the central bank kept interest rates unchanged. Yes, we are well aware of that. But oil is kind of screaming a little bit. And I don't know why. Because last I heard, the United States had an oversupply of oil. And unless bombs are being dropped physically on Iran, I'm not sure what the hell's going on with energy prices. So, but technically, everything you just heard is correct. If oil prices rise, gasoline and diesel prices rise too. Everything that is shipped to your door or shipped to the retail store that you walk your happy ass down and buy from, which you should instead of giving Jeff Bezos more of your money, they pay a higher price to get those goods shipped to them. So they raise their prices. So yes, higher oil prices means higher inflation, which means the Fed is less likely to reduce rates. And if they get high enough, they could raise rates, but I don't think that's going to happen. I think the worst case scenario is that they remain neutral at the next Fed meeting as well, even if West Texas Intermediate hits something like $70 a barrel. But we'd have to wait and see. Meanwhile, Metaplanet is raising $137 million to pay down its debt and buy more Bitcoin. Yay! CoinDesk's James Van Straten writing this one. Metaplanet is set to raise up to 21 billion yen, or 137 million, to fuel its aggressive Bitcoin buying spree and pay down its debt. The firm will generate the funds through sales of new shares and stock warrants aimed at a group of select investors. You spelt suckers wrong. Anyway, Metaplanet will issue 24.53 million new common shares at 500 yen per share, around 5% above the prior close, raising approximately 12.24 billion yen in upfront proceeds. The company shares closed down 4% on the day, reflecting short-term dilution concerns despite the premium pricing. The capital raise is structured as a third-party allotment, meaning the securities are placed directly with specific investors rather than being sold to the general public on the open market. Each new share is accompanied by 0.65 stock acquisition rights, equating to 15.94 million potential shares and 65% warrant coverage. The warrants have a fixed exercise price of 547 yen and a 1-year exercise period. Of the upfront capital, 5.2 billion yen is allocated to partial repayment of existing debt. Metaplanet has approximately $280 million worth of debt outstanding, according to its dashboard. The remaining proceeds are expected to support further Bitcoin accumulation and general corporate purposes. Company currently holds 35,102 Bitcoin. So they want to spend 5.2 billion yen to get rid of their debt. And they want 21 billion yen. Okay. So that leaves quite a bit for operations and Bitcoin buying. The question becomes now, will this stock be sold? Will people actually purchase it? And further, will it be oversubscribed? Will they have to issue more stock because they need more than 21 billion yen worth of interest? Who knows? We're going to find out probably in a couple of days. Probably by Monday we'll know. Who knows? Bybit eyes neobank features with IBAN accounts rollout planned for February. This is the last story of the day. It's from The Block, and it is written by none other than Brian Danga. Bybit CEO Ben Zhao announced on Thursday that the crypto exchange plans to roll out IBAN-based fiat accounts as soon as February, positioning the platform closer to traditional banking and expanding its services beyond digital assets. According to Zhao, the exchange aims to let users hold US dollars, pounds, and other fiat currencies and move funds across borders, a step that would add, quote, neobank features and expand its reach beyond trading into payments and custody for a user base that now exceeds $81 million globally. No, I'm sorry, exceeds 81 million users globally. The planned accounts, branded as My Bank, will be issued with the support of partner banks, including PaveBank, a lender licensed in Georgia, Zhao said. And each account will carry an international bank account number, enabling transfers in and out across 18 fiat currencies. Access will be subject to, of course, know your customer checks conducted both by Bybit and its banking partners, with the February launch contingent on regulatory approvals. Oh my God, oh my God. A Bybit spokesperson confirmed the plans to the block. Quote, Bybit users can have their own personal IBAN, which is just IBAN, guess that's international bank account number, to receive money and transfer assets out. When they deposit, they can choose which currency they want to choose, crypto or fiat. When they transfer out, they can transfer to their own account and third-party account. We will firstly support USD and then support other currencies, said the spokesperson. The planned launch is part of a broader expansion. Zhao said the exchange is developing a new custody product focused on banks and large investors involved in, of course, the tokenization of real-world assets. He said Bybit is also looking into the United States expansion, which would require a licensed partner, and confirmed a U.S. public listing is a long-term goal. The company is in talks with major banks to advise on a potential listing, according to Zhao. The developments follow a year marked by both growth and disruption for Bybit, the second largest centralized exchange by trading volume. In February of 2025, Bybit suffered a hack attributed to North Korea's Lazarus Group, with approximately 1.4 billion in Ether stolen, and according to a Jan 2 company recap, Bybit used its treasury and partner funds to replace the client assets. So good for you. And I guess we're going to get yet another bank because all the crypto bros want to be banks. I think there's penis envy going on here. I honestly, I do. I think these are all people that weren't able to get into traditional finance, felt jilted, and then lo and behold, here comes crypto, and they start scamming everybody under the sun because they just don't give a shit anymore. They want what they want. They're going to get what they're going to get, and they don't care what you want either, and they don't care about your family because they're all fucking scumbags. So where do they eventually gravitate to? Traditional finance, where all the other scumbags that don't give a fuck about you or your family reside. It's just one big happy fuckfest over there with all the dick envy. I can't stand this place anymore. And I'm not talking about Bitcoin. This is exactly how it was going to happen the minute altcoins came up. This is exactly what was going to happen. I couldn't call it. I didn't know it was going to look exactly like this, but at this point, these guys were just, they always wanted to be in TradFi, and this was their gateway. They no longer have to spin up altcoins. They no longer have to get, ChatGPT to make false faces to put on their website as their board of directors. They don't have to lie anymore. Well, at least they don't have to lie the way that they've been lying. Now they can lie a completely different way, along with their buddies over on Wall Street. I say, fuck them all. If they all lit themselves on fire, I wouldn't shed one bloody tear. It's all a casino. It's all a casino. It's all a casino. Unless you possess the actual item that you say has value, then you do not own it. All of your ETFs, all of your stocks, they used to have stock certificates, and people would keep that in their safe. That's how they knew they actually had stock. Yeah, I know, still on paper, but you get my drift. At least you had that. Now, they haven't had that shit in decades. I've never even, I've been around for decades. I've never actually seen a printed stock certificate. But I know they exist, or they used to exist, because that's how they used to do it. So at least you had that. At least you had a record that you held that would hold up legally in court, even if it was paper. But you don't even have that shit anymore. No. One of these days, I would love it if we had, I found a parallel universe where somebody was like going, okay, sure, you can trade oil futures. And if you want to buy this contract for 100 million barrels of oil, then if something happens and you get liquidated and you have to take possession of the oil, we'll be more than happy to ship you to your house 100 million barrels of oil. because now you've got to take physical possession. Think that should, I mean, I don't like laws, but I honestly think that in futures of anything, you should be forced to take physical possession if the market turns against your ass. That would really, really quelt, because that shit actually happened. That's why you can't buy, that's why there's no such thing as futures contracts on onions. It's illegal to trade futures contracts on onions. Why? Well, it so happened, it just so happened that some people, some traders, I think it was in Chicago, at the Chicago Mercantile Exchange or commodities, whatever, wherever they trade commodities, wherever the hell they were trading onions at the time. And this is around the time of, I think, the 1920s. Yeah. They bought a bunch of onion, futures contracts, and the market fucking tanked on onions. So onion farmers from far and wide who did not appreciate the fact that their onion prices were, well, destroyed, filled up all of their trucks with physical onions. And they drove their physical onions happy asses all the way to the store and the stairway of that exchange. And they dumped them there in the middle of summer. Can you imagine the stench as those onions rotting in 100-degree heat? Even at 85 or 95, could you imagine? That is why it is illegal to trade onion futures, because they were forced to take physical possession. And I really do believe this should be the way we all do it. If you're going to trade gold and shit goes south, you better have a safe, because that gold is coming to you. You better take possession of the futures contract, of the underlying asset of the futures contract that you lost. Otherwise, it's all paper and it's all going to zero. I will see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.